Alright, so I made my midweek video on Thursday, so it wasn't really midweek, but I thought might as well just finish out the week with a Friday video here. Friday recap of how my day went. NIVF was one of the main plays, but I will go to that last. First, I just want to go through AGBA. Real quick, was looking for a listed first screen day. It already kind of had a bounce on Thursday. And, the odds of it really going Friday were lower because if we already had a bounce, every bounce that precedes, I just find that the odds are lower and lower and lower as time goes on and volume dries up. So basically, AGBA was a uh, basically break even, small loss, whatever. I bought it here 238, spiked up, came right back down, sold it. It just didn't feel right. I said, you know what, let it consolidate, hold green, hold VWAP, and then we'll come back to it. It held green, started to hold VWAP. I rebought it, but then again, the volume just didn't come in. It didn't get the push and the bids I thought it would get for early in the morning, so I cut it, and it ended up just fading off. That's it, just a normal loss. It happens. I protected myself, kept the loss small. That's all I could do. CSSE, I did give this a try in the morning for a list of first screen day bounce. We had a massive run. Big drop, volume dried up, but I said, you know what, maybe this could get going in the morning. And it almost got there. I bought it as we broke the highs, had chased a little at 25 because it was so quick. And then it had the hard crack here, started fading off, and I sold it right here. There was a big bid at 24, and I just took him and got out because I said, you know what, the volume's drying up. I would rather see it's red on the day, so I'd rather see it consolidate, hold VWAP, start, kind of gearing and perking, as you will, back up towards the highs, and then break the highs plus green and rebuy with a better risk reward. But that never happened. It is what it is. Again, very small loss here. I think 200 bucks or something like that. And yeah, that's that. So now the main play that I did all right, but really messed up on. And this was really, really, really a good one. No, just one thing. Notice this volume here. Let's talk about why we had that volume. So this was a big runner. Came down. I played the list of first green day the prior day. Uh, Real quick, if you could look at the video the other day, or I could just really quick talk about it. Consolidated, broke the highs. I was buying at 155, spiked right up. I sold it for a single at 175 because this day the market was gapping down really heavy. And I was looking for the same thing next day because we proceeded to close red this day. And then Friday morning, I wake up and I see it, we're spiking with volume. Early pre-market, later on pre-market. So this is a big, big component for me with my list of first screen day pattern. If we have a stock where the volume's really drying up, but then all of a sudden we get this pre-market volume, and if we looked at this pre-market volume, it was around 3 million shares, which was more than the prior day. So right there I was like, okay, that's a good sign. Using some volume analysis and some estimation, you could say, okay, we're trading 3 million shares pre-market. Multiply that by 10. That's a Stephen Ducks type of idea. I don't know if it's still valid, but that's what he used to use. And for me, at least, it still works. Multiply that by 10. We could trade potentially 30 million shares on the day. Not even including if we start holding VWAP, staying strong, spiking. You could multiply that by another 5 and, trade whatever that is, 45, 50 million, which is exactly what we got because we opened and we held up and started spiking. Now, my goal, I actually wrote down, I have a little paper, just a notebook paper, pen and paper, where I write down morning plans, and I actually wrote buy dips versus green red. And it dipped in the morning so quick, and I wanted to buy some. I didn't have my orders ready under 150. Wicked right up. I bought it here as it was breaking out. I think I had a 157 average, great average. Started spiking, and then had this crack right here, 938, and I said, okay, that's kind of hard. It did the same thing yesterday, had a hard crack and faded off. So I sold it for break even as it wicked back up. And in my mind, I was thinking, okay, it's going to shake people out today, but holds green, and I could rebuy into that green red level in, the next 10, 20, 30 minutes, an hour, let it really fade, go sideways, then come up, buy a little versus green red, let it reclaim VWAP, add, breaks over the high of day, re-add. But that's not what we got. The volume was really sustaining, and that was the key that I ignored. The sustaining volume really should have made me more aggressive trying to get back into this sooner as it was holding up and the wicks were being bought up. We came straight back up through the highs. I should have been a rebuyer at 175, risking the 145 low. 3,000 shares. Nothing crazy because I already theoretically messed up on it. I definitely should have been a rebuyer right there, and that was my biggest mistake of the day. Because as we look, and this chart went on, started spiking, holding VWAP, no hard cracks, kept pushing, had a really, really, really nice morning spike. So that was upsetting, but what I did was I did short it. Now, honestly, it wasn't a great short. I was a bit too early, but I was patient. I was very patient with my position, uh, and I was in control. So that play, I'm just pulling it up. That was in my Cobra account. I was short from 212, so right here, 212s, and covered at 189, so right down here in the 189s. For the range of the day, that's great. I wish I could have got a little higher average on the short, but what I did well was scale in as well. So I don't have the arrows. I didn't save the arrows on Cobra, but I could remember it off the top of my head here. So I think my first short, yeah, my first short was on the push through two. I shorted, it was just a feeler, 100 shares through two. Had this crack. I thought, oh, that could be the hard crack. That's not a hard crack. I was fooling myself. Bounced. I shorted 1,000 shares with like a 196 average. Then we held, ripped higher. I was adding in here because my plan. So it's a very nuanced thing here. So my plan was to build into a position, and I have it written down somewhere on a piece of paper. Let me look. So these backside bounce are listed first green day shorts, as I call them. The idea is to short into higher, not higher, well, yeah, theoretically higher highs into the high of day breaks. And the reason is, okay, so here's a paper. I said for the bounce shorts, list of first green day shorts. For this sake, I'll just call them list of first green day shorts. My rules are I must short into pure strength. I could use daily resistance levels, intraday high of day clearouts like this. Spiked in the high day, cleared out the shorts, came back down, or spikes that are just under high of day, so like respikes here that are under high of day. I said I can't short into weakness on these because it's too risky. I use VWAP as a guide. And use daily level support and resistance. So my idea, I zoomed out on the daily chart for this short, and I said, what level looks key? I said, okay, looks like this 220-ish area looks like a key. But I said, if I'm shorting a 2, that might be a little too tight of risk. So then I said, okay, we dipped here. This is where the big crack was, topped out pre-market, 240, I said. So actually, I got lucky because 240 was actually my risk level. And I was sticking to a hard risk, and we tapped 239. This has happened to me a few times. You just have your days where you get lucky. It happens. I got very lucky. I could have been getting stopped out for a $1,200 loss on this short, but instead, it just happened to be the top. And that was, could be random, could be not, but I was just using support and resistance there. So back to me building into this position. So yeah, my first short was down in this range. I added 1,000 shares here, and then I think right here, yeah, I added another 1,000. So I was in 3,000 shares, risking 30 cents, so 900 bucks. I was cool with that. Spiked up. I added another 1,000 here. Now 240 was, I think I was giving it a little wiggle room, maybe to 250 at that point, because I wanted to see if it cleared out and slam, like, like it did here, clear out, slam. And then we started coming down. I added 5,000 to 5,000 shares here. Risk 239, got that 212 average. And then I actually had to go away from the screen. So I set stops. Um, and just a little thing I do, I don't set the stops right at 239. At this point, I had about an hour and a half drive, so I had to set stops, and it was right about here where I left the house, yeah, around 11:20, 11:30. So I put the stop right at 235, the highest level below the high of day, that highest wick. So 235, because with slippage, I'm sure it would get me out of 240 anyways. So I had 5,000 shares from 212, risking that level, and then we just faded. And by the time I got back behind the screens, where was it? We were boom, boom. It was somewhere right in this range. Oh, it was right in this range here. And we were just kind of holding up, cracked here. I think I was covering, yeah, like right around here. And hold on, let me see if I could just pull this over just for verification's sake. 5,000 VIF. Yeah, here we go. I just screenshotted this in my Cobra. So yeah, NIVF 212 closed at 189. 5,000 shares. Good gain. About $100 in borrow fees too. It was a little more pricey, but is what it is. No. And that's really that. That was my day, and I ended up let's see, making a little over 625 bucks. And I really was a bit disappointed about my lack of execution on the long side for NIVF, but it's another lesson learned for me. You always got to be learning from your mistakes, always be learning from the patterns you trade. And for this one, it's when the volume's really, really good, especially when that pre-market volume's really pushing, and intraday, when it opens, the volume's really churning, all dips are being bought up. You see those quick wicks in the morning, you know, wicked up, wicked up. That's strength. And you want to be buying and look at the volume, increase, increase, increase. Even if, you don't have your original average, that was really nice. The problem with me was I was stubborn and I was, emotional, saying, "Oh, I don't want to get in 20 cents higher," but you got to get in because look at how much higher it ends up going. And just with 1,000 share position, if you make it up to the 220s, that's awesome. You know, for me, I would have not much on this. I would have had maybe a 3,000, 4,000 share position max, but that, is a very solid profit. And these are one of those trades, one of the main trades a week that I really need to be there for, because for me, when I trade, I like to scale, but not only scale when I have a cushion on the day, even more so than I would without one. So what I mean is, let's say I had, rebought just 2,000 shares at 175. We're spiking up, spiking up. I would have sold half through two just to be safe. Sold the other half here, uh, you know, just to keep numbers simple at 220. So, let's say I was in at 170, so $300 and then 500 bucks, an 800 buck profit on the long side, let's call it, would have helped me push maybe an extra 2,500 shares short on the short side, because I would have said, "Oh, okay, you know, my 5,000 share position, short position, I was risking, 1,200 bucks." But theoretically, if I was up 800 on the play, I would say, "Oh, this is how I think." This isn't how everyone thinks, but I would say, "Oh, I'm only risking, net 400 bucks, 1,200 minus the $800 profit I already locked in." So, theoretically, I could really scale in and I could risk, 2 grand for the same amount of risk I would take on this short trade. So in that scenario, let's see, 210, 243. Yeah, I could have taken, another 1,000 to 2,000 shares. And, maybe I would have been a little more patient, getting a little better average up here. And then even being more patient, maybe for this crack into the close. And it could have really compounded my gains. Now, in hindsight, of course, 2020, I still am very happy that I made it out alive on the day with a profit. And I was able to get something out of the day. But the biggest thing I got was the lesson about the volume and to really, really, really get back in when the volume tells you to on a play like NIVF. But other than that, I mean, really solid week. Just almost another $9,000 week. It's funny, my weeks have literally either been $9,000 weeks this month or break even. I just see that's the way things have been going for me. It's either a week where everything is working and it's consistent, or a week where nothing's working. And some people have a hard time with that, and it tests their patience because and their discipline because people want to see profits every day. But that's trading. Some weeks are good, some days are good, some weeks are bad. You just gotta. I always say my goal is break even every day. If I could break even every day, I'll eventually get my one day out of the month where things go really well. And that one day is really all I need for my month. But it just so happens that you win some, you win more than you lose, and things even out well. But break even's always the goal, and sticking to process, patterns, and discipline is really the most important things. You focus on your process, and the profits will come. You focus on profits, and you're not going to find them. So stick to your process, stick to your patterns, stick to your discipline.